Lisa Cook, now at the center of a political storm, is a member of the Federal Reserve's Board of Governors, shaping decisions that affect every American's wallet. As the first African-American woman on the board, Cook's appointment by President Biden in 2022 was historic and controversial. Her academic work focused on the economic impact of racial discrimination, a departure from the Fed's traditional priorities. Critics argue she's more activist than economist, while supporters say she brings a vital, overdue perspective to the institution. The Fed's recent push for diversity and inclusion, embodied by Cook, has drawn fire from those who see it as mission creep. Detractors claim her appointment is political, injecting ideology into the central bank. Supporters counter that her presence addresses long-ignored economic realities for marginalized communities. This tension sets the stage for the scandal now engulfing Cook and the Federal Reserve. The controversy threatening Cook's career isn't about policy, but a personal financial scandal: alleged mortgage fraud. She's accused of falsely claiming 2 properties as her primary residence to secure better loan terms, a federal crime if proven. The case surfaced after social media posts by Bill Pulte, head of the Federal Housing Finance Agency, announced criminal referrals. Cook's legal team claims any misstatements were unintentional, but she hasn't directly denied the core facts. For a top financial regulator, even the appearance of such an error raises serious questions about judgment. The scandal's timing and nature have fueled critics who already doubted her qualifications. The allegations strike at the heart of public trust in the Fed's integrity. The scandal exploded when Donald Trump demanded Cook's immediate removal, framing it as a clear case of corruption. The administration moved to terminate her, a rare step for a Fed governor, whose role is meant to be insulated from politics. Cook responded with a lawsuit, arguing that only cause related to official misconduct justifies removal, not personal legal issues. Her defense firing her would shatter the Fed's independence, exposing it to political whims. The Fed's autonomy is crucial for making tough economic decisions free from election year pressures. If presidents can fire governors over scandals or disagreements, the Fed's credibility and stability are at risk. Cook's legal battle has become a high-stakes test of the boundary between the White House and the central bank. The outcome could redefine the limits of presidential power over the Fed. The Cook saga spotlights a deeper debate. What should the Fed's role be? Traditionally, the Fed targets inflation and employment. Recently, it's expanded to issues like climate change and racial inequality. Supporters say these factors shape economic health. Critics call it mission creep and a distraction from core duties. Cook's research on racial violence and economics is seen by some as vital, by others as politicized. The Fed's 2022 Diversity, Equity and Inclusion Plan is proof to critics that the institution is drifting. Yet, markets have barely reacted, suggesting investors see the Fed as already politicized. For everyday Americans, the stakes are real. Fed decisions affect mortgages, jobs, and savings. If the Fed is distracted or paralyzed by politics, economic management suffers. The risk: higher inflation, weaker job markets, and instability, especially for working families. The Cook controversy is a flashpoint in the Fed's ongoing identity crisis. As the drama unfolds, 2 narratives compete. Is Cook defending the Fed's independence or deflecting from personal misconduct? Supporters see her as a bulwark against political overreach. Critics say she's hiding behind institutional norms. The case raises tough questions. Should Fed independence shield governors from accountability? Or does removal for personal legal trouble set a dangerous precedent? The outcome will shape the balance of power between the White House and the central bank for years. Ultimately, the Cook affair forces us to weigh the risks: a compromised regulator or a politicized Fed. The answer could redefine the future of American economic policy.